Chapter 15. Charge-offs and collections with a balance. There are several ways to remove a charge-off or collection, so don't be surprised when you see an attorney doing it differently than a credit repair specialist. The best approach depends on at least 5 factors, all of them very important. You don't handle an old collection in the same way as a collection that is less than 2 years old. Likewise, you don't handle a small collection the same way you handle a $5,000 collection. First, we need to understand the difference between a charge-off and a collection because the law is not the same for both. A tiny collection hurts your score the same as a large collection. It's not the amount owed but the date that affects your credit score. What is a charge-off? A charge-off is an account, usually a credit card, that has been unpaid for 6 months. The creditor may quit efforts to collect and close the account as a charge-off. It is no longer an asset for the company. However, you still legally owe the money. A charge-off doesn't mean you get to keep the coat and shoes and all those restaurant meals without paying. The only time a charge-off should happen is when there was an unexpected bona fide emergency, often coupled with a loss of income. When disaster strikes, you have to prioritize paying your rent and feeding your family. We all get that. A charge-off should not occur because you went crazy on a shopping spree and then got lazy about paying the bills. When a charge-off shows on your credit report, it docks your score more than a late payment. It remains on your credit report for 7 years from the date of the first late payment, unless you get it deleted early. The law states it cannot remain on your report more than 7 years. The law does not state a minimum time, which is good to know when you're negotiating a pay agreement. A charged-off account may be sold to a third-party collection agency. Companies like NCO Financial, Portfolio Recovery, Encore Capital Group, Empire, and Midland are all examples of collection agencies that buy a bundle of bad paper from creditors. Some companies hire a collection service but retain ownership of the debt. An example is Nordstrom using Radius Global Solutions to do the collection work. There are also law firms that specialize in recovering money from unpaid debt. In my experience, the law firms buy only large debts and are not shy about filing lawsuits, so never ignore a letter from a law firm. Law firms will negotiate settlements and set up payment plans. Obviously, a flat sum settlement is better than a payment plan because it gets the event closed and done sooner. However, if paying a flat sum is impossible, then a payment plan is much better than getting sued in court. Read every word of the offer and get your own legal advice if you don't understand something. Never sign without reading and understanding the terms. What is a collection? A collection is an account, often a credit card, that has gone into default status, meaning it is seriously past due and is now with the company's collection department or sold to a collection agency. A charge-off can become a collection. When that happens, you usually see 2 derogatory accounts listed for the same debt. You might see the original creditor and the collection company. This causes a double hit to your credit score because the system reads it as 2 baddies. A charge-off is an account that's gone from being an asset to being a loss. A collection is an account that has been unpaid for a long time, typically 6 months. Charge-offs can turn into collections and hit your credit score twice. It's annoying when a charge-off becomes a collection and then is sold from one collector to another and possibly another after that. This creates 3 baddies on your report and penalizes your score 3 times. One way to track this is to follow a balance and date from the first to the second to the third company. For example, if the balance is an odd number like $508 and it is charged off January 2019. Then you see a collector with a $508 balance starting February 2019. Then you see another collector with a $508 balance starting February 2020. A year later with the same balance. How, then, should you handle charge-offs and collections? Let's do what the experienced pros do, look at the big picture. There is never a guarantee when it comes to credit repair, but by using the strategy that best fits your scenario, you greatly improve your chances of success. 5 questions you must answer up front to determine your personal strategy. 1. What is the date of the first delinquency? 2. What is the balance you owe? 3. Has the account been sold or transferred to a third-party collector? 4. Why did the account go delinquent? 5. Are there factual errors or discrepancies on the credit report? When diving into these 5 factors, we assume that the account is yours. If not, if you truly never had an account with that creditor, then you have merged credit accounts that are not yours. If the account does belong to you, don't send a letter stating otherwise. In the earlier days of credit repair, people challenged ownership of an account and often got it deleted that way, but that is no longer an effective method. In fact, it can backfire and get your account flagged as frivolous. It's much more effective to use a different strategy nowadays, which we'll look at next. Date/age of account. We want to look at 2 important dates. First, when will the account age off your credit report? Your free consumer report probably calculates this for you. Look to see when it will be deleted due to the part of the law that states a negative collection or charge-off cannot post for more than 7 years from the date it first went delinquent. The older the account, the less it impacts your credit score. If you owe on a collection that will fall off your report in a year or 2, then it's probably best to leave it alone. If you pay it off now, it will change the date of last activity to today, thereby lowering your credit score. To avoid that, you would need a written agreement that the creditor will delete the account with the credit bureaus upon receipt of payment. It's unfair and makes no sense, but when you update the DLA by making a payment, your score goes down. This is because the way the system is set up, the older the account, the less it impacts your score. You don't want a 6-year-old account to get updated to today's date. It's like you get punished for doing a good deed. If it's old, and no one is contacting you demanding payment, let the sleeping giant slumber on. If you wake up that sleeping giant, especially if the balance is large, then the creditor might say, "Hey, we've got a live fish on the line here. Let's reel in some money. Let's file a lawsuit and force payment." You don't need that when you can be patient for a few months. On the other hand, if the account is only 2 to 4 years old, then dealing with it is probably a good idea. But first, if you owe money on an old debt that is past the statute of limitations, then you cannot be sued, so no one can garnish your wages or bank account. Some unscrupulous collectors will sue you anyway, then it is up to you to show up to stop it. However, they can call or mail you a demand for payment. Being past the statute of limitations does not mean the debt is forgiven, it only means they can't use legal force to collect. What then? If you have some funds with which to negotiate a settlement and included in the agreement is a deletion clause, then that is a win/win. You can use this question as leverage. If you don't agree to delete this derogatory from my credit report, then why should I pay and have my credit score punished for paying? You can't sue me, so the only incentive I have to pay is if you will remove it from my credit report. Don't be surprised if they claim they can't do this. Sometimes, they change their minds when it comes to the last week of the month and the deadline for quotas and commissions is looming. You can also ask them to ask their supervisor for an exception and to get back with you in 2 days. The way to get the best possible terms for your settlement is to give it some time and don't be too quick to jump at the first offer they present. Once they're convinced they won't get more money from you, they'll usually accept less. That said, some companies have a hard rule regarding settlements. If you want them to delete it from your credit report, you must pay the balance in full. If you want a reduced payment, then it stays on your report. Instead of deleting it, they post a $0 balance with a settled for less than notation. The notation has no bearing on your credit score, but it makes it extremely difficult to get the account deleted altogether. Mortgage lenders don't look down on settled accounts, they respect you for negotiating a good deal. The worst part of this is updating the date of last activity, which can harm your score. So, then the question becomes, should I or shouldn't I pay in full for the deletion? The answer depends on your situation. Look at it through the lens of common sense. How much will the savings be? What is your ability to pay? If the savings isn't that much and your budget can handle the payment, go ahead and get it off your report, especially if it is 3 years old or newer and damaging your score. The extra cost for a significant improvement to your score is worth the price. This means you need to look at your entire report to see if getting this one account removed will make a difference. The more negative accounts you have, the less each one impacts your score. If the savings is several $1,000s and that is significant to your finances, then you might choose the settlement, then deal with attempting to get it removed later down the road, say after 6 months pass. You may or may not be successful, so don't count on it. If they happen to fail at changing the balance to $0 or post a wrong date, that would give you an opportunity to challenge the accuracy, but don't count on that happening. If you have 7 or more collections to negotiate, then saving money on each one might be critical to your finances. You might be in a position where you need to get them paid and behind you so that they don't continue to accrue interest and the stressful calls and letters will stop. If you want to get a home loan soon, then speak with your local mortgage broker now to create a strategy together and then use that broker for your loan later. Balance owing. Your ability to pay is an important factor to consider. If you have no money and your income can't support paying, and they're harassing you for money, be ready to explain your circumstances and possibly show a recent bank statement and pay stub to prove your case and prevent them from suing you. You should also consider this from the perspective of the creditor. If you owe more than $2,500, it's probably worth their effort to file a lawsuit against you. In some states, that number is much lower. In Washington state, where the law favors the creditor, collection agencies will file lawsuit over a few $100s, and some of them have an attorney on staff all set to do that as many times a day, against as many people per day, as they can manage. The laws in Texas are much more favorable toward the debtor. If you owe $500 or less, many credit repair businesses won't bother to negotiate a settlement. Instead, they advise you to pay it and be done. However, since you're doing your own credit work, you can do what many of my other readers have done and get a settlement agreement for half off, more or less. And keep the extra cash in your wallet. I don't know about you, but saving $100 is not nothing for me. A $10 collection hurts your score as much as a $10,000 collection. That sounds insane, but the scoring system reads both incidents as failed to pay and penalizes the score equally. I once had a mortgage client with a whole page of collections, each less than $50. The client had a great job and high income. I couldn't imagine how all those bills went unpaid, so I asked him what happened. I can't ever find a parking spot in Seattle, so I just park, but then I let the tickets pile up and don't get around to paying them, he said. Now that he wanted to buy a house, his personal parking policy had come back to bite him. He still got his house, but the low credit score meant he had to take a higher interest rate than what he should have deserved. Has the account been sold? If the original creditor charged off your account and sold it, then they no longer have ownership and can no longer accept payment from you. In this case, the balance should show $0 because you no longer owe them. They can't collect on a debt that is not theirs. If a creditor shows a balance owing on a debt they no longer own, then you can dispute it based on false information reporting. Reason for delinquency. If you were late due to no fault of your own and you tried to work out an agreement back when that happened, but they were jerks and refused to work with you, then you have nothing to be ashamed of. No reasonable person and no mortgage broker will fault you for falling on hard times. You may choose to disclose that information when you're negotiating a settlement agreement in order to gain understanding and come to a good agreement for payment. If the delinquency occurred during the COVID pandemic, then you might be able to contest the late payment due to the CARES Act if the dates match. However, that grace period has ended now. You can read about the CARES Act on this government website page, Factual Errors and Discrepancies. Errors on your credit report can be your friend, as discussed in previous chapters. It is an opportunity to send a short, simple letter that states, "This account is reporting factual errors." Delete. You want the entire collection or charge-off deleted, not fixed or updated.